It's time now for a look at what the markets are doing on this Monday, and for that I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for having me today.
The U.S. markets pulled back last Friday from their rally. The Nasdaq down 0.25%, the S&P a tenth. Korean shares looking mixed today. How's it look as we start the week?
The major stock indexes in the U.S. jumped to their session highs after Dow Jones reported that Vice President Mike Pence would postpone a China policy address amid positive signs on trade. But stocks paired most of those gains after the Commerce Department barred 5 additional Chinese companies from buying U.S. components without approval. Despite Friday's choppy trading action, stocks posted weekly gains as investors cheered the prospects of the Federal Reserve cutting interest rates as soon as July. The Dow and S&P 500 both rose more than 2% for the week, while the Nasdaq climbed 3%. Stocks in Asia were mixed as investors monitored geopolitical risks and prepared for the high-stakes meeting between President Donald Trump and Xi Jinping. Japan's Nikkei rose 0.13% and South Korea's KOSPI gained 0.03%.
Meanwhile, we have gold, a safe haven asset, taking off recently. It's at $1,400 for the first time in around 6 years. What's pushing gold up, and how far do you think it'll go?
Gold prices have surged this month, passing $1,400 an ounce for the first time since 2013. It's become easy to find reasons to be bullish. Everything from dovish central banks, technical indicators, negative yielding bonds, and fears of military strike between the U.S. and Iran are all working in favor of higher gold prices. The U.S. Federal Reserve and the European Central Bank last week hinted that they were open to ease policies to counter a global economic slowdown exacerbated by global trade tensions. Helping bullions appeal, the dollar index fell to a 3-month low against a basket of currencies. As the gold rush can be easily justified, we may be able to see $1,500 to $1,600 an ounce in the next 12 months under a bullish case scenario that includes borrowing costs falling below zero. Gold will remain a highly relevant portfolio diversifier for a while.
Got it. Well, later this week is the G20 summit in Osaka, Japan. The leader of China has just been to North Korea, a visit seen as connected to China's trade war with America. What should we be watching at the G20 and elsewhere?
Investors are watching the Middle East situation alongside a dovish shift from major central banks and the ongoing trade tensions between the U.S. and China. Next up comes a speech from Federal Reserve Chairman Jerome Powell on Tuesday. The Fed Chairman speaks at the Council on Foreign Relations in New York City Tuesday. He will discuss the challenges facing the U.S. economy and may give additional implications on the rate cuts. Investors may keep to the sidelines as they focus on possible meeting between Chinese and U.S. leaders on the sidelines of the G20 summit scheduled on June 27th to 29th in Osaka, Japan. China and the United States last week said they were reviving talks ahead of the meeting between the presidents. Markets are hoping the two leaders could help restart stalled talks to resolve a year-long trade war.
And we'll be watching that for sure. All right, Dr. Hwang, that's going to have to do it for today. We appreciate your insights. Thanks for coming on.
Thank you very much.